All right, so let's dive in. We are hearing more evidence from Washington businesses, some leaving the state, expanding outside the state, or at least relocating their personal residence because of mounting taxes and regulations. And some of those business leaders were featured last Thursday, July the 16th, at the Association of Washington Business Economic Future Solutions Summit. That's a mouthful. It was held at this Hilton at SeaTac, and we were there to cover it. There was a panel discussion that was titled Economic Reality Check, and it featured some of these business executives. You're going to hear from them just momentarily here. One of them is Nate Dick. He is the vice president of Tiger Stop. They're located in Vancouver. The company manufactures automated stop gauges and what they call material pusher systems that attach to existing machinery. I got on their website and learned a lot more about what they do. But he told the audience that the business climate is currently the most challenging they have encountered in more than 3 decades since their business launched. And here is a clip from some of the comments from Nate Dick with Tiger Stop.
So what we're seeing right now is rising costs kind of across the board. In our 32 years in business, we've never seen all of our costs rising together and this aggressively. And so what we're seeing is I'm seeing other businesses, vendors of ours, kind of just getting tired and throwing in the towel. I'm seeing business owners either move out of the state, shut down their business, or sell to multinational corporations or venture capital. And I think that that's harmful not just to our economy, but also to our local communities, because these are business leaders who live in their community. And so these are the people who are sponsoring little league teams and local events through the Chamber of Commerce. And when those people throw in the towel or quit or get bought out, not only is that capital leaving the state, but that's also local leadership that is no longer in that community.
And now Mike Sensky, who is president and CEO of Pearson Packaging. And he told the crowd gathered at that AWB summit last week that mounting taxes and the pending income tax are among the greatest reasons for their decision to expand into Idaho. Now, they're located in Spokane, so it makes a little bit more, I guess, practical sense for them to expand just across the state line into Idaho. By the way, Pearson Packaging, if you're not familiar, they design, engineer, and build automated end of line packaging machinery. So Mike Sensky started out initially on that stage last week saying the income tax, we believe, some have characterized that as being like the final straw for them because of all the other taxes, whether it's B&O taxes, property taxes, other anti-business taxes in the state of Washington. But he said he believes actually the fact that Washington Democrats pushed through the 9.9% millionaires tax is really just evidence of what else is to come. I found that interesting. I hadn't heard that argument made by many others. So here again is Mike Sensky, president and CEO of Pearson Packaging.
We're moving to an environment that has a 5.395% tax, income tax. That's okay because, services require tax dollars, and we understand that. But the state of Washington went from 0 to 9.9 in a very short period of time. And if that still stands up, and the concern we have is as the legislature kind of continues, tilting in the direction that it is as a reaction to what's going on in the federal government, we're really concerned that that's going to continue because that money's spent, that it's going to get worse and worse. And so we see that as the beginning, not the end. For us, things like the estate tax, we're a pass-through entity. The estate tax, there's a lot of machinations that we go through to protect that. We do not want to find the death of a shareholder driving the liquidation of the company to essentially pay an estate tax that was thrust upon us, with little to no notice, on top of what we were planning for at the federal government level, because the person who's going to buy Pearson Packaging Systems is not going to be engaging in stakeholder capitalism, and we can probably talk about that later. They're going to be engaged in shareholder-based capitalism, which is an entirely different animal. Those profits are going to be swept out of the state of Washington to Chicago, to New York, to LA. It's those types of things that harm what I would say small to medium-sized businesses that are really trying to grow, that want to retain their independence, their private ownership, and their mission and purpose-driven reason for really, being an employer. And so those are some of the reasons. So I would say it's that lack of predictability. There's a lot of different things and again, it's the predicted unpredictability, right, that we think we're going to see going forward, and we've started that process to move as a result of it.
Now, as previously reported by the Center Square, the Association of Washington Business does their employer surveys. They survey their members, and it was back in May that AWB produced a survey from more than 400 of their members who participated, finding that 24% as of May were considering moving their business out of the state of Washington, nearly triple what AWB had found 16 months prior in their winter 2025 survey of members. So that is a dramatic increase in business members for AWBB that say, we may well be looking at the exit doors. That same survey found 18% saying they were developing a relocation plan, and 7% have already secured a location outside the state of Washington. So the number of business leaders looking at moving their personal residence was also one of the survey questions in that spring survey of AW members, and that was 55%. 55% of their members looking at relocating a personal residence, even if they're going to leave their, business location and employees and continue operations inside the state of Washington. Obviously, if they want to relocate outside their personal residence, the state of Washington, it would be to avoid the pending income tax, potential estate taxes, that sort of a thing, capital gains taxes. So that's interesting, and I encourage you to check out our Center Square Washington page for a lot more from that AWB, that little snippet from that conference last week, and more members who were on that stage, were business members that were on that stage, are included in my article today. Now, a follow up to yesterday's segment about the Department of Commerce putting out bid requests for a study on what it would cost to replace the clean energy production from our four Lower Snake River hydroelectric dams. They produce anywhere from 7 to 9% of our state's total energy production based on, which study you're looking at and who you ask. Now, the Trump administration put former President Biden's plans to sort of expedite removal of those dams on hold as soon as he took office. So, talk of doing that is really off the table at this point. But taxpayers are still footing the bill for, in case you missed yesterday's episode or my article, an $800,000, again, taxpayer funded study, money that came from the 25-27 budget approved by state lawmakers to fund this Department of Commerce study. So they've got these bid requests out now. It'll be finalized next month. And they're looking to find out what really it would cost to have other clean energy production capacity if the dams were removed. Again, no plan currently underway that the dams would be removed, replaced, but we're going to spend $800,000 of Washington taxpayer money to fund this study anyway, because it was already budgeted. So here is Todd Myers with Washington Policy Center. He's the director for their Center for Energy and the Environment, because they did a study in 2022. They know, as of 4 years ago anyway, what it would cost to produce that energy if the dams were removed.
our study that we did in 2022 found that it would cost about $34 billion to replace the Snake River dams and make it so that that electricity was as reliable as it currently is. But of course, like, when is the last time a government project ever came in at cost that was expected? So you have to expect those costs to go up. Inflation since 2022 has gone up. The cost of everything has gone up. So, I mean, this is going to be an astronomical amount of money. Washington State spends about 100 to 200 million dollars a year, depending on how you count it, on salmon recovery. $34 billion is 150 years worth of salmon recovery funding at current levels. Why would we spend $34 billion just to replace the electricity when we could use that money to improve salmon habitat across the state? It is a really bad idea for the environment and for ratepayers.
Important to note that that $34.3 billion price tag from WPC's study is just for replacing the energy. That does not account for the very cost effective and environmentally safe way of barging up that river system all the egg product that needs to get to port. Imagine if we didn't have the river system, if the dams were removed for safely transporting all of those goods along the river highway, the marine highway system. And you instead had to put all that product in the back of a semi truck. And how many more trucks that would be on our highway system, how much more that would cost, or some of that potentially being a railway expansion, additional stops along the way as those goods are moved from eastern and central Washington to western Washington port systems as well. So it's going to be a heck of a lot higher than that. And again, as WPC and Todd Myers pointed out, this is a federal decision. This is not a decision that's going to be made here in the state of Washington. And yet, you, the Washington taxpayer, are on the hook for yet another study, an $800,000 study for someone to tell us what it would cost to produce energy, other clean energy, wind, solar, battery storage components. What that would look like across the state is interesting as well. And then, of course, you also would have to have the transmission system. If you greatly expanded all of that clean energy with more wind and solar and battery storage, you don't have the transmission system in place to move that power to people who need it. So there are so many other things that are not even in that $34.5 billion price tag that WPC put out, not to mention the fact that was 4 years ago. And we've got inflation, of course, since then, right? So the cost would likely be dramatically higher. All right, let's dive in. The state of Idaho closed the books on fiscal year 2026 recently. How that fiscal year works, it's like in summer, they finally end, from 2025 to 2026, that fiscal year is how that operates. And they ended up in the black, in fact, rolled $250 million in cash balances to the general fund for next year. The Idaho State Tax Commission also issued more than $910 million in individual income tax refunds during the fiscal year, the largest amount ever returned. And then there's Washington, where yet another budget gap is looming for 2027. I've seen various figures, but about $4 billion apparently in deficit is how we're going to start the legislative session for 2027. That will be fun, won't it? Credit rating agencies have started to say, hey, you're on notice. We may downgrade your credit rating, which then, of course, reduces our ability to borrow at a decent interest rate for important issues for bonds and other, large dollar, investments that are already promised to be made in the state. So I reached out to the office of Idaho Governor Brad Little this week, and his budget director responded and granted me a pretty fascinating interview. So her name is Lori Wolf, and she told me that Idaho residents, as I mentioned, received the largest tax refund in their state history, and they still have that $250 million rollover into next year. And that's due to some fiscal restraint, she says, even in good times when the cash is rolling in.
When all that federal money came in a couple of years ago, you saw states investing that in ongoing programs versus one-time needs or one-time investments. And Idaho did not do that. We did invest in one-time projects, one-time needs, and we do that consistently. We make sure that we have a structurally balanced budget and that the ongoing revenue we have coming in fits our ongoing needs. I think sometimes, when people look at one of the hard things in government budgeting is revenues ebb and flow, right? And you're constantly looking at, I think, what priorities you have. So it's a balance sheet, but it's also a reflection of your values and priorities. And, we've been able, our revenue here in Idaho it slowed a little. We were not in recessionary times, but we saw that slow a little bit, just like we've seen that across the nation. And our governor and what we've done in the budget office is, we look at that and we reprioritize. So it did not mean we had to make broad cuts across all state government. In fact, the governor protected his highest priorities, which was public education, transportation, water infrastructure, economic development, workforce. And we made sure that we were able to invest in that while finding efficiencies in places that we could restrain some of our spending in other areas. We've also been able to do back-to-back tax cuts over the past several years, and we balance the tax cuts with that spending, making sure that we're just not taking all of the money from Idaho taxpayers and finding new things to spend it on, but we're very disciplined in the areas that we feel government should be involved in spending money, and we make those decisions in the governor's budget recommendations.
Now, as we've shared in recent months since our new income tax law was signed by Governor Bob Ferguson, there are a lot of businesses, there are a lot of wealthy individuals um, heading for the exits or talking about doing so. Many citing that millionaires tax as the final straw. Again, it is, you probably know if you're watching this podcast, it's 9.9% of a tax on income above $1 million or combined household income in excess of $1 million, taxed at that 9.9% rate. But many of those businesses say it's going to hit them as pass through entities and how they report income, business profits, if you will, on their individual personal income taxes. And so they're going to get dinged. And so they're not going to stick around to see if this thing expands, although many believe it will eventually be a tax on all income levels. But Wolf told me, yes, Idaho has an income tax, but being a flat rate and a predictable rate, she says, is not keeping people out. In fact, quite the opposite.
And we do have an income tax, and individual income tax is one of the major sources of funding to our general fund. But we've done a lot to simplify our tax policy. We have a flat tax in Idaho. So, right now, both corporations and individuals pay 5.3%, which is a lot lower than even a federal rate, but it's predictable and has simplified our tax code. Also, this year, actually, we just closed out our fiscal year, and Idaho delivered the highest rate of individual refunds ever in state's history, almost $1 billion in tax refunds out to Idaho families. And our budget is still fine, and our economy is going strong. So, when you ask families what matters to them, rarely do we have Idahoans ask us to get rid of the income tax because it's not that burdensome. And we at the state level try to find ways to invest even in our local economies and our local infrastructure needs to try to reduce the pressure on property tax as well. So, it takes kind of that combined effort between the state and locals, because at the end of the day, we want more money in their pockets. And You get rid of income tax, you're going to have to tax them somewhere else, because if you continue to spend, you're going to have to figure out that revenue source. So just getting rid of one tax base doesn't necessarily solve your problem. It's simplifying it, it's making it fair and predictable. And, that's really what good tax policy looks like.
Now, voters will get to decide in November if they want to keep the income tax or want to repeal it. Of course, we also have a legal challenge, a group that's challenged the constitutionality of the law that is also pending. And also, this week, a group of lawmakers, budget officials, some folks from Governor Ferguson's office, some business and labor groups had their first meeting on what's apparently going to be a 2-year long endeavor to figure out how to budget better in Washington. They're going to look at revenue forecasts. They're going to look at spending decisions and how all of that contributes to some of these structural imbalances that we seem to have every single year, and some of the volatility. It's a bipartisan group, and there are 8 lawmakers on that panel, 2 from each of the 4 legislative caucuses, and then, as I mentioned, some members from Governor Bob Ferguson's office and some business associations, labor organizations. I wanted to tease that I'm going to be talking to one of the lawmakers who's on that committee, Representative Travis Couture of Allen. He's a Republican, and he is the chief Republican on the House Appropriations Committee. So he is on that committee, and we'll find out. I'm curious to find out, is he optimistic going into this endeavor that really we can get spending under control? Because as we've heard many say, including some former Democratic governors recently say, they don't believe we've got a revenue problem in the state of Washington. We've got a spending problem. So I'll be anxious to share that with you in tomorrow's episode of Washington in Focus Daily. All right, now public sector unions, which will directly benefit from the millionaire's tax, make up virtually all of the contributions so far to the campaign against the initiative that could repeal Washington's newly enacted income tax. This is according to publicly available records on the Public Disclosure Commission site. And my colleague TJ Martinell has an article up today on the Center Square Washington page. But I want you to see a video clip here from Brian Haywood of Let's Go Washington, the group that put up Initiative 645 to potentially repeal or let voters decide if they want to repeal the new income tax. Um, and the unions here are specifically the Washington Federation of State Employees, $1 million already for donations. The SEIU 775 ballot fund, those the purple shirts in Olympia that are always there, and SEIU Initiative Fund donated each $500,000. So that's where the money to convince you not to support Initiative 645 to repeal the income tax. That's where that money is coming from. So here's Brian Haywood.
They're spending big money to protect an income tax. Why is that? Is it because they love the children and small puppies and seals? No, it's because they got their hand in the trough. And I think there's one more that's not on there yet, which is the WEA, because I'm getting people. I've had teachers say, "Hey, look, I'm getting a ton of text messages from the WEA telling me to vote no on the 645, which says that the WEA is spending money. So I don't know where that's going to get reported and needs to be looked at. But whoopsie. SEIU and the WEA, the 3 public unions, they collectively take in about $150 million every single year. That's tax free. It's tax exempt. They don't pay any taxes on their money they take in, and they can just use that on political expenditures like getting an income tax imposed and then defeating the attempt to repeal it. And it absolutely exposes what anyone that goes down to Olympia will always tell you, yeah, the SEIU, WA, they're running all the legislation coming out of Olympia. And so I think the PDC gives us an insight into who are these guys. I went up and looked at it myself on the after I got a notification from me, I looked at who are the other people that have donated, and there's no other single individual that's even big enough. It's like $110, like it's these big ones. It's $1 million from WFC, then two SEIUs at a half a million each, and then it's like 110,000, 110 not thousand, $110 by a bunch of small donors. So union employees putting money so they can look like they have people. I don't know. But
Yeah.
there's nobody else, right?
And again, there's an article up at the Center Square Washington's page today, written by my colleague TJ Martinell, with a lot more on this and some of the concerns being raised about the unions that are dumping money into these are taxpayer employees that are dumping money into the campaign to convince you to vote against the initiative that could repeal the income tax.